For more on this story, we're now joined by Mark Brolin. He's an economist and geopolitical strategist. Thanks very much for joining us here on WION. Now, of course, bigger question is this event likely to undermine the broader banking system? Are we likely to see a bigger meltdown as a direct fallout of what's happened to the SVB?
I think you can see that this is probably not a Lehman moment, despite it's definitely a big crisis. And I think you can say ultimately that this has been naive optimism coupled with herd mentality that has led to this crisis. Because I think, and it also, I think, also highlighted is the short-sightedness of the financial sector, in the sense that overexposure to as a radically low interest rate historically they have been radically low for a long time, and the bank's overexposure in that sector has been, in a way, if you look at this historically, been a bit silly actually. But this is not a Lehman moment probably, because the bank is so much smaller than Lehman was, and it's the systemic risk it's not as entangled with other banks as Lehman, not even close. So possibly you can say this is more closer to what's happened in 2001 when Enron fell, because then it was one sector, the energy sector, which was severely affected, and the shareholders in that sector. And this time it's the tech sector with many shareholders affected. But I think the systemic risk, as mentioned before, is probably not close to as grave as it was when Lehman fell.
Also, the question that many are asking is it the fault of venture capitalists or the bank itself? Who would you blame for this disaster?
The bank itself has to take the brunt of this collapse, because it's actually very strange to have it's a cardinal sin of finance to have a high risk for actually modest gain, and that's what happened when they overexposed themselves to bonds. And it's actually very strange, because if you do have to take on high risk, you should do it at least expect a high return. And they took on high risk without expecting high return. So I think the management has to take the brunt of this. But as also mentioned before, I think there's a herd mentality in all this, that you get all these people on board during the salad days. They met in ski resorts and stuff like that, and everyone was talking up the chances, and nobody was expecting interest rates to go up. And thereby damaging the balance sheet. So it's a herd mentality, but at the end of the day, it's still the bank management that has to take on most of the guilt.
All right, Mark Brolin, we'll leave it at that. This is, of course, still a developing story, one that is likely to have massive repercussions in the days ahead. Thanks very much for sharing your perspective with WION.
Thank you.